Hope you are doing fantastic. Welcome to episode 2 of the Simple Money Show, brought to you by the Simple Money Financial Academy. I am your host, Tommy G. Today, we're going to be answering the question, should I take out a home equity line of credit or refinance my home to pay off credit cards? Stay tuned.
Welcome to the day that your financial future for you and your family changes forever. Our goal, our mission, our purpose is to give you the knowledge and tools that you need to build a strong financial foundation for a successful financial future. Welcome to the Simple Money Show.
Welcome back. You again are watching the Simple Money Show. This is your host, Tommy G. Today's question is one that I get, or I have gotten a lot. I've even included it in the book Game Changer, which I'm going to look at some notes here just to make sure I'm giving you the proper explanation of everything. But that is, should I take an equity line on my home or refinance my mortgage to pay off credit card debt? And I'll just tell you right off the bat that 99% of the time, my answer is going to be the same. It's going to be a resounding no. So I'll tell you some reasons why. But over the 24 years in the mortgage business, I closed a lot of what they call cash out refis, which is basically you refinance your entire mortgage, you got a new interest rate, maybe a new term, and you pull money out and you're using that money for either home improvements, which is a different thing altogether, which I do agree with, or you're paying off debt, paying off credit cards in this case. And that ends up you only getting a brand new loan. So for this example, let's just say a person has a $200,000 mortgage on their home and their home is worth $400,000. So the equity is the difference between what they owe and what it's worth. So in this case, it's $200,000. So that person, they take out a new loan for $250,000. Let's just say they get a better interest rate or whatever the case. They pay off their old loan and they have $50,000 in cash to pay off their debt. With a cash out refi, I'd help a family or an individual pay off a lot of credit card debt and lower their overall monthly payment. That sounds great. That sounds awesome, right? Hey, you can lower your payment by $300 to $500 or $800 a month overall and save you some money. But the problem is, and what I saw over and over again, the deep-seated issue at the very end of that, and what I experienced time and time again is my clients would find themselves in the same position 2 or 3 years later and not learn from their mistakes. And that is abusing credit cards and getting themselves back into credit card debt. They didn't change their financial habits, and 2 years later, they would contact me again and say, Tom, we need to pay off some credit card debt. You know, when I was first in the business, I didn't care. I just wanted the mortgage loan. Then I really began to see people and how they suffered and the patterns that they were using with their money. And that's when I tried to change how I approached that. But now they have a $250,000 loan amount and they have more debt. Possibly their home has gone up in value. But do you see how that's becoming a snowball? And it doesn't really help them and the problem. So if you do not have your stuff in order, or you have a handle on how to use credit cards, what to use them for, what not to use them for, and not abuse them and not run them up to the max, this is not a way to do it. You do not want to use your home as an ATM machine. Even if you get a home equity line of credit, a home equity line of credit is interest only. It's usually for the first 15 or 20 years. And the rate is attached to what's called the Fed rate, which could jump up at any moment. I remember when it was at 1% to 2%. Now I think it's at like 7.5% or 8%. So your payment's adjustable. So that's not really an option either, unless you know that you're going to keep your financial house in order and not abuse your credit cards. Let me give you one example of I had a client that did this, and it was one of those 1% that I would say yes to. And that is they moved into a new home. They didn't really have a lot of equity in the home because they were going to do a lot of home improvements. So they redid the kitchen and the bathroom. They did a basement. They did a sunroom. They redid the landscaping, put a new roof on, AC unit. They did all that, and they paid it with all credit cards, believe it or not. So what they did is they refinanced that home because now it's worth a lot more money. So they took a little bit of cash out. They paid off those credit cards, and now their home or their investment is worth more than it was before they moved in. That's really the only way or only indication, only scenario that I would be okay with paying off credit card debt would be that one. If you improve your home and improve the value of your home, that's one area that I would say, yeah, that's probably a good idea. So if you have questions, let me know if you running into a situation where you think that you are going to get into that. Let me know. Again, you do not want to abuse your equity line or a cash out refi that you've built into it with home improvements. That's a different scenario altogether. So I know some people are going to disagree with me, and that's okay. I'm just sharing with you what I've experienced in my professional career over the years, and that is that people do not have a handle on how to use credit cards in the proper way. They just end up back where they started from. And it's the same habits. They just put everything on credit cards. There's no savings, nothing. You got to have your financial house in order. And that's what we do here at the Simple Money Financial Academy is we help you to build a strong financial foundation for a successful financial future. We also provide you with credit restoration and credit repair. That's one area through Simple Money Credit Solutions. So if you need that, if you need some help, give me a call, drop me an email. My information's below. Leave a comment on this video. Hit the like button, smash that subscribe, whatever, and let me know how I can help. This is Tommy G with the Simple Money Show, Simple Money Financial Academy. Hope you have a great day. We'll talk to you next time.